Scene script. Have you ever pondered the idea of financial independence and early retirement? The notion of not having to clock in at 9 or wrestle with the daily grind? Imagine a life where you're not shackled by financial obligations or a demanding job. It's not an impossible dream, but a reality for those who embrace the FIRE movement. That's financial independence, retire early. Consider the tale of Jane, a woman in her early 30s. Jane was an ordinary person living an ordinary life. She had a 9-to-5 job, a mortgage, car payments, and a lifestyle that was comfortable but hardly extravagant. And like most people, she dreamed of a life where she didn't have to worry about money. Jane decided to make a change. She began by cutting back on non-essential expenses, saving as much of her income as possible. She invested wisely, focusing on assets that generated passive income that didn't require her to trade time for money. Slowly but surely, Jane began to build her financial independence. She was still working, but she was no longer living paycheck to paycheck. She had a safety net, a cushion that gave her the freedom to make choices based on what she wanted, not what she needed. Fast forward 10 years, Jane, now in her early 40s, had achieved her goal. She was financially independent. She had enough passive income to cover her living expenses, and she no longer needed to work to survive. She was free to retire early, to spend her time as she pleased. Jane's story may seem extraordinary, but it's not unique. It's the story of anyone who has embraced the principles of the FIRE movement. It's a tale of discipline, of sacrifice, and of a relentless pursuit of financial independence. To summarize, the key points discussed today revolve around the idea of financial independence and early retirement. It requires discipline and sacrifice, cutting back on non-essential expenses and saving as much as possible. It involves investing wisely, focusing on assets that generate passive income. But most importantly, it requires a change in mindset. It's about seeing money not as a means to buy things, but as a tool to buy freedom. It's about understanding the true value of time and the freedom that comes with not having to trade it for money. This is the essence of the FIRE movement. It's not just about retiring early, it's about achieving financial independence, about gaining the freedom to live life on your own terms. Like Jane, you too can embrace the principles of the FIRE movement and embark on a journey towards financial independence and early retirement. After all, the only thing standing between you and your financial freedom is you.
Ever wondered how much you'd need to save to achieve financial independence? The answer lies within the mathematics of a concept known as FIRE, which stands for Financial Independence, Retire Early. The most essential number in your journey to financial independence is calculated by multiplying your annual spend by 25. Notice the emphasis on annual spend, not annual income. This calculation is based on the principle that you need £300 invested for every pound you wish to spend each month in passive income. Hence, your FIRE number is also your monthly spend times 300. This mathematical principle is founded on the 4% safe withdrawal rate, as defined by financial advisor William Bengen. He proposed this rate after analyzing the S&P 500, which typically produces an average of better than 10% growth per year when studied over a period of approximately 30 years. Bengen considered factors such as inflation and market volatility. After studying previous market activity, he concluded that a 4% rate of withdrawal per year would provide for a 30-year sustainable portfolio in the vast majority of cases. So to paint a clearer picture, if your monthly spend is £1,000, then your target for financial independence is 300 times 1,000, or £300,000. Alternatively, if your annual spend is £12,000, your financial independence target is 25 times 12,000, which also equates to £300,000. The first step in planning your financial independence, therefore, lies in understanding your monthly and yearly expenditure. Without this knowledge, it is impossible to take further strides towards your financial freedom. In summary, the mathematics of FIRE revolves around the principle of multiplying your annual spend by 25 or your monthly spend by 300 based on the 4% safe withdrawal rate. Knowing your monthly and annual spend is crucial in determining the amount you need to save to achieve financial independence. Armed with this knowledge, you can then plan your journey towards financial freedom. Remember, the journey to financial independence is not a sprint, but a marathon. Embrace the mathematics of FIRE and take the first step towards your financial independence today.
Guys, good morning. It is 8 a.m. On Monday the 7th of April 2025. Just very quickly before things change, okay, maybe you may have caught that. The market closed down 3.65% on Friday. The figures have just reset themselves there as market open has just happened. Expecting quite a sharp downturn just from listening to news a short time ago from what has happened on other global exchanges which have already opened today. This all seems to be mainly related to tariffs announced by the US. There does appear to be, at least from my perspective, what I would call a degree of exaggeration going on. I mean, precisely, or to be more specific, apparently some people have characterized the movement in stock markets as a, quote, bloodbath. I forget which market it was that I heard mention of, and it was said it was down 10%, I think it was today. So while we're waiting for the figures to update, let's just have a look and see where things were at. This will move, as I say, probably quite significantly in the not too distant, but current price before any changes here, 75.85. We have 267 shares. They were worth 20,200. And since the last video that I had done, I think at that time the return on investment was in and around about 15%. So that has halved approximately down to 7.6. So that theoretically would still be a decent return if you had the money in an interest-bearing account. Over the space of 3 years or so, you might expect to get something like that kind of an amount back. But realistically, I think that is going to dip lower today. It's a brilliant buying opportunity. That's really the only thing to say about it, as far as I can see. The market is clearly reacting, and I would even suggest that it is overreacting to the news on tariffs. If we look a little further down, you can see current average purchase price £70.47. So we are within £5 of our, or almost within £5 of our average purchase price. And if we look at the figures for there's no point in looking at the daily range other than to appreciate how much of a reduction there had been. I think that's really from Friday. And as you can see, in terms of the 52-week range, we are virtually at the very lowest point that we have seen. So there is, as you might say, massive potential for growth, for recovery, and to put it crudely, massive potential for a sale. If you're interested in investing and you wouldn't normally invest otherwise. So I'm a little bit frustrated that this has not moved as yet, but while we are waiting to see movement, here is a little advert I would like you to watch.
I want a bank that makes money easy.
That sounds perfectly reasonable.
And you are?
We're a bank called Monzo.
I want a bank that shows me what I spend instantly.
No problem, just give us a go. See?
Can you make splitting bills easy?
Super easy, check this out.
But it's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on.
Can I talk to a real person 24/7?
Of course.
Even now?
Yep.
Even now?
Anytime.
Can you tell me when I'm running a little low on cash?
We certainly can.
Cool. Can I afford these?
You certainly can't, sorry. Can't afford that either.
That's a real shame.
Not really. Time's up, how'd you get on?
It's a draw.
Can you help me save for my next holiday?
Oh, how about you set up a savings pot in the Monzo app called Barbados, baby?
Thanks for listening, Monzo.
We're all ears.
We can go now.
Rude. You make Monzo Monzo.
Okay, so as you can see, there is a affiliate link for Monzo in the description for the video. There's also one for Smarty, which is the mobile operator I use, and in fact I've just changed one of my children on to Smarty as well. Basically, you can set up a group, and you get a 10% discount, I think, if you use a second SIM within your group. So to give you some idea of how cheap Smarty can be, currently I pay £8 a month, and as things stand I get unlimited calls, unlimited texts, and 50 gigabits of data a month, as far as I can remember. The deal that I have just signed up to for one of my children is for £8 a month for unlimited calls and texts and 80 gigabytes per month. So it's costing me a total of £17 per month, and I've got two mobile deals basically running for that. I thought I had seen a bit of a jump there just as I was talking, but it doesn't look as if these figures have changed at all. So while we are kind of waiting for that to happen, let's have a quick look at the notifications. So first off, GameStop climbs 5% amid broader market sell-off as the CEO buys shares after a Bitcoin purchase. Chip stocks decline. Nvidia down 4%, Intel down 7%, Broadcom down 5%, as China exposed chip stocks slide on retaliatory tariff. So that is basically talking about because Trump had imposed tariffs, then China has decided they're going to have tariffs in the other direction as well. So that has impacted these. I suppose they would be American companies. I'm not sure if they are American manufacturers, but either way, it seems as though that has hit them. Big banks descend. I had heard mention of this in the news on the radio a short time ago. Barclays down 10%, Santander likewise, Deutsche Bank down 11%. On growing concerns over global recession. Now, I would suggest that this is hype, and that basically I don't think we're any more likely now to see a global recession than we were a month ago. Quite honestly, although tariffs will have a bit of an impact, ultimately at the end of the day, people still need to trade. International trade still needs to happen, and think things will find their level, so to speak. Donald Trump actually made a comment. He was asked about the declines in stock markets, and he made some comment about sometimes you have to take medicine to fix things, which I thought was an interesting way of looking at it. I suppose, if we zoom this out a little bit, I'm not sure, where would you put the trend line on that if you were going to put a trend line? Let's have a go. Would it be something like that? So that's maybe actually, it's alright. That's maybe a little on the high side, but what I want to do, if I just drop that there, and then if we move it slightly down the way, can we do that? Is that roughly what the trend line should look like? Actually no, I don't think that, I think that's too steep. Let's get rid of that one, and I'll do it again. This is basically just a sort of a bit of an effort to try to see where I think fair market value should lie based on where the market has been. So what I'm trying to do there is sort of bisect or cut the graph in half to have half as much on top of the line and half as much below the line. Not easy to achieve, but maybe it could be something like that. Is that kind of where the trend line should be? If that is right, maybe the market hasn't actually overreacted by all that much. If my line is correct, this was all superfluous extra growth that wasn't really supported by anything tangible, and what the market has done is simply correct, and slightly overcorrected, but not by an awful lot. Now, as you can see on the right hand side here, we are seeing a drop of nearly 6, so you could say 6.6%, pretty much a drop straight off the bat at market open this morning. So price down to £70.86, and that essentially wipes out our return on investment altogether. We are still in the green, but only just, only by 0.55%. And in terms of the other figures, well, you can see the stats are right at the far left hand side there. I think it is right to say that this is the lowest point that we have seen in the S&P 500 in the last 52 rolling weeks. So as I say, I'm not particularly concerned by this. I think it is a reaction to the announcements that there have been about tariffs, and quite frankly it represents a fantastic buying opportunity. But just before I do that, let me just recap on what is now the current portfolio value given that shift since the market open and the figures update. So of course we still own the same amount of shares, but now they are only worth 18,900 odd. I want to go ahead and put through our weekly buy order. So if you have been watching the journey to date, you'll know that each week I buy £120 of the S&P 500 exchange traded fund, and this is on the Trading 212 practice platform. As you can see, there is a little bit of movement in price happening there. It looks as if things are actually starting to climb back slightly already. People are essentially in agreement. I think that that drop is an overreaction. So people are cashing in by sending in purchases. We're going to do likewise. Today this is going to buy us almost 1 3/4 shares, but not quite, so 1.68 or 69. The current purchase price just before I send it through sitting at £70.47. I'm going to predict that that's not going to change much at all, because the current differential is less than 1%. So I'm going to say I would expect to see the current average price. I'm going to expect it to go up 1p, so I'm going to expect it to go to £70.48, but that's it. So let's send this through, see how many shares we end up getting. So it's a market buy, not putting any limits or stops in place. The market is open, and we did get 1.68 and a half shares for £71.20. Let's have a look and see. So in fact, the although there's been a slight change to the average purchase price, it hasn't just quite tipped over the penny, almost at 70 pence. Sorry, £70.48, but just not quite there. The market has actually recovered very slightly, 0.1% or something like that, and that is giving us a slightly greater. Well, actually, it's just moving about at the minute. The return on investment looked as if it was almost at 1% there for a brief second. But it moved away again. Quite a bit of volatility at the minute, I suppose. Not a surprise with that drop in price. Sort of a bit of a drop that could panic some people, perhaps. People who, quite frankly, probably shouldn't be in the market if they're going to react like that. But nevertheless, this is what people do. They think they can make a fast buck, and well, what can you say? At the end of the day, if you're on the financial independence path, hopefully you were not just about to need to cash in a lot of your portfolio. You could find that it's worth quite a bit less than it had been on Friday. That really, I suppose, is a good time to point out that it is probably always worth building up a sizable cash cushion, or at least holding a sizable cash cushion when you are financially independent, or when you decide to go financially independent, to protect yourself, basically, from this kind of market volatility. It has been seen that normally when there is a market crash, and personally speaking, I wouldn't characterize this as a market crash. Certainly there has been a pullback, but I wouldn't characterize it in those terms. But when there has been a market crash, typically a couple of years does see the market recover at least to where it had been before. and that's if it doesn't surpass and go well beyond that point in terms of market value. So with that said, obviously then it makes sense to have at least a couple of years worth of free funds in an account which is not affected by stock market volatility. And on that note, guys, I'm going to leave it there for today. Thank you for watching if you have been. As I say, time in the market is much more valuable than trying to time the market, which is something that you cannot do reliably. Yeah, I'm optimistic for the future. I'm not at all concerned by this drop in value. In fact, I'm relishing the idea that I have probably been able to buy a greater number of shares this morning than I would have been able to last week. So that is quite fantastic. Guys, with that said, if you enjoy the content, if you're interested in following the journey, hit the subscribe, and if you like this one, give it a thumbs up. And bye for now, and catch you next week if you are following. Have a great end to your Monday.